I read news every day, 7 days a week, so you don't have to. Hi everyone, this is Serena. Welcome to the very first episode of Serena Reads. On my channel, I'll be summarizing what have happened around the globe politically, economically, and financially through my reading of the daily news. Also, I'll be drawing implications of those events on the US stock market. As an avid stock trader myself, I like to stay informed on those events before I make any trading decisions. So hopefully you get some useful information out of my videos as well. So now, without further ado, let's get started. First, let's have an overview of the major events that have happened last week. On Friday, during phase 1 of the trade talk, the US and China have struck a deal that diffused the tension between the two major trading partners, and that boosted the US stock market performance as well. On Thursday, the UK election has given us the result, with the Conservative Party led by Boris Johnson winning a majority government, and his slogan to win this election was "Get Brexit Done." On Wednesday, the Federal Reserve has announced it's going to keep its benchmark rates low and steady at 1.5% to 1.75%. Now let's turn our attention to phase 1 of the trade talk. The US has agreed to roll back its tariffs on $120 billion of Chinese imports, while keeping its 25% tariffs on the remaining $250 billion of Chinese goods. China has also agreed to purchase more US agricultural products. The amount, however, was not specified. The agreement has successfully diffused the tension between the two trading partners, and no escalation of tariffs have brought back confidence into businesses, and they will increase their spending accordingly. However, some thorny issues still remain, and they may potentially become a source of market volatility, and these issues include intellectual property, technology, etc. Now at this point you may ask, what do all these have to do with the US stock market? Well, no escalation of tariffs successfully brought back confidence into the US stock market, reduced the uncertainty some people are speculating about, and also encouraged animal spirit. So animal spirit in economics means how people arrive at their financial decisions, including buying and selling stocks at times of a high volatility or uncertainty. And these decisions are often based not on logical thinking, but on irrational confidence. Animal spirit, in the short run at least, has a positive effect on the US stock market. This agreement has also helped support the current rebound in manufacturing, which in and of itself plays an important role in predicting whether there's going to be a stock market crash in the near future. Since the manufacturing has rebounded, that's just another indicator showing that the stock market's crash predicted by some people is not going to happen anytime soon. Last but not least, a trade deal was already priced in the stock prices, whereas new tariffs were not priced in. So if new tariffs were imposed on the $156 billion of Chinese imports as threatened, the US stock market would react very violently. Now let's take a look at a UK election. This election, as we all know, is about none other issue than Brexit. Boris Johnson's promise of "Get Brexit Done" by January 31st, as opposed to its opponent Labour Party's promise of yet another EU referendum, provided a moment of clarity in terms of where Brexit is going to go and clarified Britain's immediate future. Its significance lies in the fact that the 3.5 years of political wrangling associated with Brexit is coming to an end. British politics will likely stabilize, and Britain is more likely to have an orderly exit from EU, avoiding a hard Brexit. A hard Brexit means UK not only leaves the EU, but also its single market and its customs union. UK will likely aim for a free trade deal with EU. However, if a free trade deal is not achieved, UK will leave EU without a deal or extend its transition period. A transition period is a period UK is in currently, where everything UK runs as if UK is still part of EU. Now it's worth to note that leaving EU without a deal is a cliff-edge scenario to be avoided at all costs, as a no-deal Brexit will result in bottleneck at the ports due to border checks, a falling pound, as well as many other inconveniences for the British traveling to or working in EU, as well as many other undesirable consequences. As much as this election provided clarity on the issue of Brexit, there are still elements of uncertainty remaining. For example, the working class voters are likely to push for a protection of the manufacturing sector and protection from imports, which will affect Johnson's freedom to negotiate a deal with the EU. Also, although Britain is more likely to have an orderly exit from EU, however, there's a very slight possibility, no, very slight, that the Prime Minister will lead the country to leave EU without a deal. Now it's time to ask, what do all these have to do with the US stock market? Well, the immediate effect is as follows. As Johnson's win brought clarity on the issue of Brexit, a British pound surged immediately, which made the US stocks immediately more attractive. As in the near future, Brexit will most likely dampen US company growth, as UK will soon lose its role as a gateway to free trade with the EU for the US companies currently taking advantage of this role of UK. Also, the stocks of US companies currently heavily involved with trading with European countries will likely be adversely affected by this election. Now let's turn our attention to the Federal Reserve's announcement of their rate policy last Wednesday. Last Wednesday, the Federal Reserve has announced it's going to keep its benchmark rate low and steady at 1.5% to 1.75%. Their justifications is as follows. They said, and I quote, "The committee judges the current stance of economic policy is appropriate to support the sustained expansion of economic activity, strong labor market conditions, and inflation near the committee's symmetric 2% objective. The Fed has also signaled the rate is not going to change anytime soon in the coming year. These are very good news for the US stock market, especially considering no rate hike is going to help keep the high level of corporate debt in check. Since uncontrollable level of corporate debt is considered by many as a major cause of the next possible recession, no rate hike means at least in the short term, corporate debt is not going to be a cause of the next possible recession." Thank you so much for watching today's Serena Reads. If you got something useful out of today's video, please smash that like button below. If you like to stay updated on all of the current events that are happening around the globe, please consider smashing that subscribe button below and also turn on that little notification bell so that you don't miss any future episode of Serena Reads. Thank you so much for watching. See you next time.